Good morning, traders, and welcome to the Daily Call today, Monday, the 7th of September. Looking at the markets last week on Friday, the final session for the week, we saw from the US the non-farm payroll numbers come out, and essentially the average hourly earnings came in better than forecasted at 0.4%. The actual job number themselves created was 1.37 million jobs, pretty much on the forecast. The good news and the mild bit of optimism that came across the US dollar was that the unemployment rate had decreased to 8.4% from 9.8. The other major movement for the markets on Friday was from the equity markets. We did see our own Aussie 200 index drop. We did see the major indices from the US also drop as well. Friday we also did get data from Canada, and essentially it was the unemployment rate and change numbers as well. They weren't as strong as those from the US. We saw the employment change, the jobs number 245,000 compared to the 262, and the unemployment rate increased ever so slightly to 10.2 compared to the forecast of 10.1. The Canadian US CAD pair, funnily enough, did favor the Canadian dollar more than the US dollar, and that rate did drop down slightly on Friday. That was all that pretty much happened for the session. So let's move along and have a look at our chart of the day. Now, the chart that I'm going to show you today is a carryover from Friday's chart. I'll show you that first. There was the Aussie Kiwi on a daily time scale, and I was saying that we needed to wait for the candles, these two candles, to confirm as a reversal pattern. Well, this morning when I'm looking at my charts, let me show you what the chart looks like. I can see now that those two candles in fact have completed and cemented in, and it is an inside candle, which is a reversal pattern. So basically it means the market's coming down. These two candles signify a reversal, which would be that the market now changes direction into this direction that I'm showing you right here. Now, because we are on an uptrend, okay, and essentially what we're following is, highs and dips, and then highs and dips, and then continuation. This is why I have flagged this as my hot zone. So what I can now do is I can place a pending order at the break of the high of the inside candle. If I break that, that's it. I am a buyer and I am in this trade in this direction going long. Now, don't forget, if that current candle, which is this one there, which is only just started, if that should come down and break the low of the inside candle, then you need to go back and cancel out your pending order, as that would make it a null and void trade. Okay, there you have it. Aussie Kiwi daily timescale is our chart of the day this morning. All right, what's on the agenda for the session, which is about to kick off? Well, it is a public holiday in the US, and it's a rather quiet one, so no major news scheduled for today. Okay, that pretty much wraps up the session, guys. As always, please feel free to contact us if you do have any questions. Please feel free to follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you all have a fantastic trading day. I'll speak to you tomorrow for the Daily Call. Bye for now.